In 2004, Red Bull bought a struggling Formula One team called Jaguar Racing for £1, literally a single pound coin plus an agreement to cover the debts. Today, that team, Red Bull Racing, is worth an estimated $4.9 billion. That's not the wildest part. In September 2025, a group of investors bought out the minority shareholders of McLaren Racing at a valuation of roughly $4.5 billion. A team that, just 5 years earlier, was so short on cash it had to sell its own headquarters and lease it back just to survive the pandemic. And the team at the very top of the grid, Ferrari, is now worth more than $6.5 billion. More valuable than 25 NBA franchises and every NHL team on the planet. So what changed? How did a sport that was, for decades, a graveyard for rich men's money, a hobby you funded, not an asset you built, turn into one of the fastest appreciating asset classes in global sports? That's what we're breaking down today, the actual economics of owning a Formula One team, where the money comes from, where it goes, why it used to be a money pit, and why billionaires and sovereign wealth funds are now fighting to get in. To understand why F1 is valuable now, you have to understand how bad the economics used to be. Before 2021, there was no cap on what a team could spend. None. If you had a car manufacturer's balance sheet behind you, like Ferrari, Mercedes, or Red Bull, you could outspend a smaller, independent team by 4 times over in a single season. Some of the giants were reportedly burning through $400 million a year or more, chasing tenths of a second, while teams like Williams were trying to compete on a fraction of that budget. That created 2 problems. First, it made the racing predictable. Whoever had the biggest checkbook usually won, which is bad for a sport that depends on drama to sell tickets and TV rights. Second, and more importantly for our purposes today, it made owning a team a terrible investment. McLaren, one of the most decorated teams in F1 history, lost $137 million on just $166 million in revenue in 2018 alone. You weren't buying a business, you were buying a very, very expensive hobby that occasionally won trophies. Then 2 things happened almost back to back. Liberty Media bought F1 from longtime commercial boss Bernie Ecclestone for roughly $8 billion in 2017. And in 2021, the sport introduced its first ever cost cap. Those 2 decisions rewired the entire business model of Formula One, and they're the reason we're making this video. Piece of financial engineering in modern F1, the cost cap. Starting in 2021, every team, whether it's Ferrari with a century of history and a car manufacturer behind it, or Haas, running one of the leanest operations on the grid, is legally restricted in how much it can spend developing and running its race car in a given season. It started at $145 million, dropped down to a base of $135 million by 2023, and for the 2026 season, it's been recalibrated up to $215 million. Now that jump looks huge on paper, but it's mostly an accounting shift, not new spending power. The FIA folded previously excluded costs, like capital depreciation on facilities and equipment, directly into the cap, so more of what teams already spent now counts inside the number. Engines have their own separate cost cap too, set at $130 million for 2026, specifically because F1 is introducing an entirely new hybrid power unit formula that year, and wanted to prevent a repeat of the $400 million arms race. What's excluded from the cap is just as important as what's included. Driver salaries don't count. Marketing doesn't count. The salaries of your 3 highest paid staff, usually your team principal and chief technical officer, don't count. That's a deliberate design choice. It means a marquee driver like Max Verstappen or Lewis Hamilton can earn $50, $60, even $70 million a year without eating into the budget that makes the car fast. It also means teams can spend as much as they want on hospitality, branding, and star power to build commercial value, while the on-track arms race stays capped. The effect of this single rule has been staggering. Once every team is forced to operate within roughly the same budget, the gap between a top team's revenue and its costs stops being reinvested into an endless spending war and starts falling straight to the bottom line as profit. That's the mechanism. The cost cap didn't just make racing closer, it turned Formula One teams from cash-burning trophies into structurally profitable businesses, almost overnight. One insider described it to Sportico this way: F1 teams used to be like the worst-run franchises in any sport, the ones that lose money every year. Now, the closest comparison for a top team's profitability is an NFL franchise. If you breach the cap, the penalties are real. Red Bull went over by roughly 5% in 2021 and was fined $7 million, plus a 10% cut to their wind tunnel and aerodynamic testing time for the following season, a competitive punishment, not just a financial one. So, if spending is capped, the real story of who wins and loses financially in F1 is entirely about revenue. Let's break down where a team's money actually comes from, because it's not just one thing. It's roughly 4 buckets. Bucket 1. Prize money from the sport itself. This is the biggest and most misunderstood piece. Formula One's commercial rights holder, currently Liberty Media, collects revenue from broadcasting deals, race hosting fees paid by Grand Prix promoters, and trackside sponsorship. In 2024, that added up to something like $3.4 to $3.6 billion in total commercial revenue for F1 as a business. Under the terms of the Concorde Agreement, the confidential master contract that governs the whole sport, roughly 45% of that revenue is redistributed back to the 10, now 11, teams as prize money. In 2024, that payout to teams totaled around $1.27 billion. Here's how that pool gets split. Teams and journalists still talk about it in terms of 2 columns, a structure that dates back to earlier versions of the Concorde Agreement. Column 1 used to be an equal share paid to every team simply for competing and meeting certain continuity criteria. Column 2 is the performance-based share, split according to where you finish in the Constructors' Championship. First place gets significantly more than 10th. On top of that base structure, there's a historical performance pool, reportedly around 20% of the fund, that rewards teams for podium finishes over roughly the preceding decade, which naturally advantages the sport's long-term giants like Ferrari, Mercedes, and Red Bull. And then there's the most talked about line item in the entire prize pool: Ferrari's heritage bonus. Ferrari is the only team that has competed in every single F1 season since the championship began in 1950, and the Concorde Agreement has, for decades, given them a guaranteed cut of the prize fund on top of whatever they earn on merit, reportedly at least 5%, escalating toward 10% depending on how large the total pot gets. No other team gets anything close to this. It's controversial, it's been controversial since the 1980s, and it's never gone away, because Formula One's leadership has always believed the sport needs Ferrari more than Ferrari needs the sport. Bucket 2. Sponsorship and commercial partnerships. This is where teams differentiate themselves the most. A title sponsor, the brand whose name is literally on the car, can be worth well over $100 million a year. McLaren's new naming rights deal with MasterCard, starting in 2026, is reportedly worth around $100 million annually on its own. Williams signed software company Atlassian as a first-time title sponsor and reportedly doubled their sponsorship revenue in a single year because of it. This is also the bucket where a winning season compounds on itself. Success on the track drives up what a team can charge for the branding on its car and its drivers' overalls the following year. Bucket 3. Engine and power unit economics. If your team doesn't build its own engine, like Racing Bulls or Williams, who lease power units from a manufacturer, that's a cost, typically somewhere in the $15 to $25 million range per season. But if you're one of the manufacturers, Ferrari, Mercedes, Red Bull powertrains, Honda, or newly Audi, supplying engines to other teams is a revenue stream. It's a completely separate financial universe running alongside the car building business. Bucket 4. The team's own brand and merchandise. This is smaller than the other 3, but growing fast, driven largely by the Netflix effect. Drive to Survive brought in a wave of new fans, especially in the United States, and merchandise, ticket demand, and hospitality revenue all grew alongside it. It's not the biggest line on the income statement, but it's a meaningful signal of how a team's brand value is compounding. Put all 4 buckets together, and in 2024, the 10 F1 teams generated roughly $4.5 billion in combined revenue, ranging from about $209 million for the smallest team, Haas, up to $812 million for Mercedes, the largest. And critically, about 70% of teams were already profitable at the operating level before interest and taxes. That is an almost unimaginable turnaround from where the sport was a decade ago. Now let's talk about the number that makes headlines. What these teams are actually worth. According to Forbes 2025 valuations, Ferrari sits at the top at roughly $6.5 billion. Mercedes is close behind at around $6 billion, following a deal in which team principal Toto Wolff sold a minority stake to CrowdStrike co-founder George Kurtz. McLaren, remember the team that was losing money hand over fist in 2018, is now valued around $4.4 to $4.5 billion after that September 2025 buyout of its minority shareholders. Red Bull Racing sits around $4.9 billion. And even the smallest, least glamorous team on the grid, Haas, is valued above $1.6 billion, a figure that would have made it the fourth most valuable team in all of F1 just 2 years earlier. Add it all up, and the 10 teams on the 2025 grid were collectively worth more than $34 billion, with the average team valuation up roughly 48% in a single year, and more than double what it was in 2023. So, why is this happening now, all at once? A few forces are stacking on top of each other. First, the cost cap did exactly what we described in Part 2. It converted these businesses from loss-making hobbies into structurally profitable operations, and profitable, predictable businesses always command a premium valuation multiple over unpredictable ones. Second, scarcity. There are only 11 Formula One teams that will ever exist at any given time, competing in a global sport broadcast in over 180 territories. Compare that to something like the NBA, which has 30 franchises, or MLB, which has 30. There's simply far less supply of an F1 team than there is of a major American sports franchise, and that scarcity gets priced in aggressively once big institutional money starts paying attention. Third, and this is the one insiders keep bringing up, F1 has become genuinely globally relevant in a way it wasn't a decade ago, largely credited to Netflix's drive to survive and Liberty Media's aggressive push into new markets, especially the United States, with races added in Miami and Las Vegas. More fans means more valuable broadcast rights, which means a bigger prize pool for every team, regardless of where they finish. And fourth, recent transactions have effectively set a public price for what teams are worth, which then reprices everyone else. When McLaren's stake sale priced the team at over 6 times its prior year's revenue, and Mercedes' pending sale was priced at roughly 7.1 times revenue, those multiples become the new benchmark that every other team, banker, and prospective investor uses to argue for a higher number the next time a stake changes hands. This is also why new entry into F1 has become almost absurdly expensive. When Cadillac, backed by General Motors, joined the grid for the 2026 season as the 11th team, they didn't just show up. They paid a reported $450 million anti-dilution fee, split as a one-time payment to the 10 existing teams, specifically to compensate them for now having to share the prize pool 11 ways instead of 10. That fee exists because the current teams have spent years, and in some cases decades, building the value of their spot on the grid, and the Concorde Agreement protects that investment from being diluted for free. None of this works, of course, without understanding what you're actually paying for on the other side of the ledger. Just building a single 2026 specification Formula One car from scratch, the chassis, the new hybrid power unit, the aerodynamic package, the gearbox, reportedly costs somewhere between $15 and $22 million before it ever turns a competitive lap. Teams run 2 cars, plus spares. Factor in a full season of development, upgrades, and the engineers required to run it race weekend after race weekend, and the total investment for a top team approaches the full $215 million cap. Then there's everything the cap doesn't cover. Driver salaries are completely outside the cost cap, and at the top of the market, they've become enormous. Max Verstappen was reported to have earned around $70.5 million in 2025 between salary and bonuses, narrowly ahead of Lewis Hamilton's roughly $70 million Ferrari contract. Those numbers exist specifically because they sit outside the cap. A team can spend as much as it wants on star power without it costing them a single dollar of car development budget. Race weekends themselves are their own operational expense. A top team is estimated to spend somewhere between $15 and $20 million per Grand Prix, once you include flying equipment on dedicated cargo planes to every corner of the world, housing and moving hundreds of staff, hospitality for sponsors and VIPs, and the sheer volume of consumables, tires, brakes, fuel, burned across a single race weekend. Multiply that by a 24-race calendar, and logistics alone becomes one of the biggest line items outside the cap. And then there's infrastructure, factories, wind tunnels, simulators, which under the 2026 rules now largely falls back inside the cost cap through annual depreciation charges, forcing teams to be far more disciplined about how they spend on physical capacity, not just car parts. This is really the whole story of modern F1 economics in miniature. The cost cap controls the car, but almost everything that makes a team commercially powerful, the driver, the brand, the sponsorship relationships, the hospitality, lives entirely outside it. That split is deliberate, and it's exactly what's allowed teams to keep growing their commercial value every year while their actual competitive spending stays flat. Let's bring this back to the question in the title. If you had the money, would owning a Formula One team actually be a good investment today? The bull case is obvious from everything we just covered. The cost cap has made these businesses structurally profitable. Valuations have compounded at rates most professional investors would kill for. Some teams have appreciated by 200% or more in just 2 years. And there is a hard ceiling of only 11 seats at the table, ever, in a sport with genuinely growing global demand. That combination of scarcity, profitability, and growth is close to a perfect storm for an asset class, which is exactly why sovereign wealth funds like Qatar's QIA and Bahrain's Mumtalakat and private equity groups have been buying in. The bear case is worth naming honestly too. You're paying an extraordinary premium to get in at today's prices. Multiples of 6 or 7 times annual revenue are not cheap by any normal business standard. And those multiples assume F1's growth keeps compounding at the same pace it has for the last 5 years, which is never guaranteed for any sports property. On-track performance is genuinely unpredictable, and a bad multi-year stretch can hurt both your prize money and your sponsorship pricing power at the same time. And you're buying into a governance structure, the Concorde Agreement, that is confidential, gives disproportionate permanent advantages to legacy teams like Ferrari, and isn't something you get much say in changing as a smaller or newer owner. But if you're asking the honest question, is this a better business than it was 10 years ago? The answer isn't close. Formula One went from a sport where even its most famous team could lose $137 million in a single year to a sport where the average team is worth over $3 billion and growing by double digits annually. That's not luck. That's what happens when you take an entertainment product with real global demand and finally force the business model to catch up with it. If this kind of breakdown is your thing, this channel is built for you. We explore the economics behind the world's biggest industries and businesses, one deep dive at a time. And every third video, we bring those ideas closer to home with practical personal finance and investing content, helping you better understand money, markets, and long-term wealth building. Subscribe so you don't miss the next breakdown, and tell me in the comments, which industry, business, or investment topic should we explore next?